Hello, everybody, and welcome to the show today. I'm really glad you could join us. So with us today is a really cool guest who's going to talk to us more about keeping more of our money, about how to make smart financial decisions in our business to be able to make the business perform better and then individually actually perform better on the financial side as well, so we can keep more of the money we're actually making and we can make smart financial decisions. So with us today is David Flores Wilson. Now, David is a CFP, CFA, editor of Planning to Wealth, and has a passion for serving as a resource to friends, colleagues, and clients. After years of advising individuals on the side, David established Planning to Wealth in an effort to find ways to better service clients and provide accessible, quality financial advice. Now, providing everything from financial planning tips and wealth management guidance to travel hacks for your next vacation, David aims to be the go-to resource for all financial topics and life planning considerations. And his financial guidance has appeared on Yahoo Finance, Investopedia, CNBC, Investment News, amongst many others. Now, in addition to managing his blog, David is a senior wealth manager and financial planner at Watts Capital in New York City, where he's been working for over 9 years. Now, there, David advises and coaches business owners and professionals on a broad spectrum of financial matters as they make progress towards their goals and dreams. Now, prior to joining Watts Capital, David was a VP in fixed income division at Barclays Capital, and he received a BS from the University of Berkeley and holds the Certified College Financial Consultant, Certified Divorce Finance Analyst, and Certified Financial Planner designation. David is the IMCA Alternative Investment Certificate and completed the Certified Investment Management Analyst Certification Program as well, and the Wharton School at the University of Pennsylvania. Now, David enjoys traveling, reading, Brazilian Jiu-Jitsu, yoga, and snowboarding as well. So, David, thanks for joining us today.
Hi, it's wonderful to be here and chat with you.
You've done a lot, man. Congratulations on your success so far. I'm really glad. I love the problem you're solving, because I think a lot of us, especially in business owners, are pretty horrible with our money.
Well, I think that financial literacy is an issue, I think, in our school system, right? It's not addressed, in high school or in university. And so, we owe it to, the clients we work with and people we talk to learn more and solve these different problems. So always interested in kind of picking up little certifications here and there. So.
A lot of people on here own a business. A lot of people on here are thinking about starting a business. So what are some of the, not necessarily even financial skills, what are some of the best lessons that you think somebody should know coming into the business of starting a new company? If I'm starting a new business, what are some of the best financial tips that you have that you see a lot of people make mistakes from that you think all startups should know?
Yeah, so I think, business owners and entrepreneurs, the financial planning for them is much more dynamic and complicated, right? And I think that, there's more stakeholders involved rather than just, okay, well, let's achieve financial freedom. Right? We have family in the business, employees, suppliers, customers, and there's just intersection between all those different things, and business owners are pulled in a lot of different directions. And so I think that when it comes to sort of building wealth, a lot of times people sort of, separate building wealth from building their company. And, frankly, building their own personal wealth might be cast aside, right? And I think that the people sometimes don't align, what they should be doing for themselves and then reflecting that in the business. And, in general, there's really just sort of 5 levers that people can use to make progress financially, right? You can save money, you can invest it, you could minimize your taxes, manage your debt correctly, and then sort of protect what you own through estate planning and coverages and things like that. And so it's been my experience that, if you're kind of doing 2 or 3 of those things really well, then things are going to work out for you on the personal finance side. And so, I think that's where, it behooves people to, just take an interest in their personal finance and focus on these different areas and the strategies and techniques that are appropriate for them.
And how do you go about doing that? I love these 5 financial levers, because I think that makes a lot of sense to focus on that. And I work better if I'm able to break it down and kind of put things in their different silos like that. So what is the good plan? Because look, here's what happens in my world. People start a business, everything costs twice as much money as they think it's going to, and it takes twice as long. So a lot of people use personal credit cards, and the whole thing gets to be a mess because right from the beginning they have those problems. So what's a good financial plan for somebody in the beginning stages of a business to think about what they need to do to make sure they have the right finances to even get that business off the ground, for example?
Sure. A lot of businesses, obviously they're doing forecasting and financial planning around the business and cash flow projections and um, tracking KPIs. But so people should be doing that for themselves as well, right? And seeing, what questions can they answer by doing these projection models, right? So if they save X amount outside of the business, or let's say they take Y amount from their personal savings and take a distribution from their old 401k to fund the business, what are the ramifications of doing that? And so, it's universal that business owners don't want to keep much money outside of the business. So we just see this again and again and again. They don't really want to diversify outside of the business, and that's it's only natural because you can kind of compare the rates of return you're getting on your business to the rates of return that you can expect in a diversified portfolio. And let's face it, most people can do better than 6% return on investment, or 6, 7, 8% or so in their business than they can, than what they can expect in the liquid markets. And so, so we've, over time said, okay, well, let's look at these other ways, right? So, and I think that's the challenge of the time period we're in now is that, for example, in real estate, right? So, one way to sort of diversify outside of the business was to buy the office and to buy the plant and then rent it back to the business. So that way, in retirement, you still have that asset and it could be an income generating asset that survives the life of the business once you want to move on or sell the business, or you can't sell the business. And so, but with, the pandemic right now, as we were discussing, what's going to happen in terms of the value of that real estate and how that would be able to support their lifestyle. So yeah, I think it's really sort of running this parallel track of planning and sort of addressing these other areas, right? How do you think about your taxes? How do you think about your financial planning, and kind of building a team that helps you do that, and then seeing what the interplay is between the business and those personal finances.
Yeah, and I think you hit the nail on the head that, a lot of us, like for one, I'd rather have my money in my businesses generating multiples, right? Inside multiple businesses. And I see how my investment there and keeping my money there grows at 5, 10x. But, like anything, right? The stock market can crash. My business can fail. With COVID-19, we've seen a lot of businesses just, all of a sudden just shut their doors because of things that happen that are unexpected. So is that wise? I mean, I imagine from your standpoint, it makes sense to save some money on the personal side, but how do I look at that? How do I look at, look, man, I mean, anywhere I save that money, I'm going to get a limited rate of return from what I would get in my business. So what's a good investment strategy there, a good saving strategy to be able to still put money aside to save responsibly, but still put my money where I feel I can get the greater rate of return, which is in my business?
Yeah, so a lot of it depends on the life cycle of the business, right? So for the clients that are, in their 50s and 60s, and they may be winding down and thinking about, okay, well, I might want to sell this business and monetize it and kind of live off the business proceeds. I think that that's a different solution. For example, that solution involves, okay, well, you can't really sell your business unless the business is no longer reliant on you, right? And so, kind of building up processes. Getting the sales structure in place, making sure that the business is not so reliant, and so that the business owner can walk away. And then that's when your business has real value, right? So I think that's sort of one way to think about it. But I think it does take sacrifice, right? So sort of to take, it's much like an emergency fund or setting up lines of credit, or as we've sort of encouraged our clients to do for many years, is develop these sort of these backups, right? We work with a client in the hospitality real estate business out west, and for years, and there's a generational shift as it's going from the first generation to the second generation, and they've been concerned, and we've been concerned of, okay, well, how do we de-risk this business, which is highly dependent on travel and people showing up at these properties, and so. So yeah, it's involved. Okay, well, let's build this balance sheet of Fort Knox, but yes, there's a trade-off. Okay, well, they didn't invest as much as some of their competitors, and but now they have these lines of credits, they have cash reserves, ready to go and buy distressed properties, and they can improve their market position. So it's, I always encourage my clients to look at it from a very long perspective. And when you do that, you need to have these reserves and sort of diversified out without sort of, risking sort of the strategy drift that we see sometimes business owners do, right? Okay, well, they may be safer by kind of dabbling in these other businesses but it's not their core competency. And so, it's a fine line there in terms of, okay, well, let's get diversified, but let's also, focus on what we're good at.
Makes sense. If we're coming in and, one of these 5 levers, and we talk about this, and we talk about savings a little as we did, what about investing? Where's the smart place to invest? Because like my parents right now got their butts kicked with all their money in the stock market. I think a lot of people did. It's, it's up, it's down, right? So where do you invest? I mean, where's the smartest places you're seeing to invest our money right now?
Yeah, so I think we truly believe in sort of some general principles that people, most people should follow. It's one, stay diversified. It's, keep expenses low. And then of course it's, avoid market timing. And so, I think that, this, when it comes to this situation we're in, a lot of people are in a situation where, there's like, oh, well, I think a 70-30 stocks bonds is appropriate. But then if you kind of drill down on the portfolios, they've got a lot of high yield bonds, they've got a lot of foreign bonds. And so the whole point of the bonds, which were sort of meant to, be a stabilizer in times of stress, there's also a lot of risk in those bonds. And so, it takes a real keen eye, looking at the portfolio and make sure it's appropriate. And I think the challenge is that when times are good is to, most people don't envision a time, where they'll need that safety net. And so, having the right amount of treasuries and high quality bonds that can offset, a hiccup in the market like this, or more than a hiccup in the market like this, is important. And I think that's where people should be very diligent about the amount of risk they're taking and the hidden risks in their portfolios.
What about taxes? No matter how much I give the IRS, man, they want more. Yeah. They will not stop. They'll take it all. So how do I pay them less legally?
Yeah. So there's just a lot of different strategies, right? And I think that, even for people that, don't have a quantitative background or, aren't familiar with taxes, it's very important for them to really build a team to make sure that they're looking at all the different strategies and techniques that are out there for them. And it's just so dynamic, right? We had the Tax Cuts and Jobs Act in late 2017, just turned the tax code upside down. And then of course, we had the Secure Act in late December, and then the CARES Act recently. And all these different things provide new opportunities, to defer taxes, to reduce taxes, to emphasize one type of tax over another. And so people should be doing that, right? And whatever the situation is, they should be looking at ways to save and spend that are tax efficient, right? So so avoiding high turnover investments, so that way you emphasize long-term capital gains over short-term capital gains. Considering things like health savings accounts, which have a triple tax benefit of deduction. They grow tax-free, and then potentially have tax-free distribution. Looking at the full spectrum of retirement plans that business owners are available to business owners, whether that's profit sharing plans, 401ks, looking at the fees and maybe the impact that they'll have on other things like the QBI Section 199A deduction. And so there's just a lot of different things, and it really depends on the situation. And, it starts with sort of forming the business, right? You might want to forego those pass-through losses of an S or a LLC in favor of a C corporation if you're going to sell that business, because you might get a $10 million capital gains exemption from qualified small business stock later. So there's just, it's really important to talk to your financial advisor, talk to your CPA, and really bring them in the tent and see what you could be doing, because just minor changes in your tax rate compounded over long periods of time, it just has a dramatic effect on people as well.
Speaking of which, David, who do I have in my circle? Because you just mentioned a financial advisor, you mentioned an accountant. Who should be in my circle for me to be able to afford putting them all in my circle. And then at the same time, like have the people I really need there that can protect my money.
Yeah. So I think, as I mentioned, a CPA, financial advisor, people who are experts in insurance coverages, as well as attorneys that focus on, whatever is most important to you, whether you're focused on a sale or employment law, as well. There's different, there's changes going around in terms of what happens with real estate and what people are able to walk away from and not. And so, yeah, I think the important thing is to build that team and as time goes on, potentially upgrade that team and switch people out. I think there's some theories that, okay, well, you should maybe, work with a firm that has all these different types of advisors in one place, or you can kind of mix and match in that way. You could have a diversification of ideas and they could kind of serve as checks and balances. So, but yes, I recognize these things aren't free either, right? So, yeah, so sort of building that team. And I think that, a lot of times, depending on the life cycle of the business, it's okay, you want to maybe build someone who has a certain level of expertise, but that's also going to build with you and is really going to serve as an advocate for you, right? So
Absolutely. What about debt? How do you manage that? That's one of the levers that you mentioned initially. And I love these 5 levers because I think you're right. If you can come in and you can address all 5, that's really how you can create the best financial situation for yourself. But how do you do debt? Because I hear so many different things, right? I've heard strategies that say you only pay it down slowly because the problem is that your spending's too high. So you save more money. So you spend it and not pay it down. Dave Ramsey's like, you pay all the debt off. That's bad. And then, you pay off the smallest, I think the smallest accounts first. Everybody's got their own view on debt. So what's your view on how you manage the debt that you have responsibly?
Sure. This is very important for business owners, right? And I tend not to be too dogmatic about it. And I think that there's quantitative and qualitative things that should be, considered when taking on debt, because, debt is an expense, but many times it's an opportunity as well, right? So it's an opportunity to grow. It's an opportunity to expand. It's in a time like this to keep afloat. As well, there's tremendous risk there, right? So I think that, obviously people are going to compare the cost of capital to the potential rate of return that they're able to get with that capital. And, but, as well, you can't just keep increasing the amount of debt and the cost of capital until you kind of get to the marginal rate that equals your rate of return, because at that point, then you'll have, you'll be risking the solvency and liquidity in times of stress. So, we want to look at it from a lot of different perspectives, to have these lines of credits that we're not using in case of emergencies, to have cash. So we have some people that, okay, well, if I'm earning, less than 1% of my cash, but I'm paying 3 or 4% of, on my debt over here, why don't I just pay off my debt? And, I think that's not necessarily the answer either, right? So I think that we want to look at it from a lot of different perspectives, but safety first. And then of course, let's grow the business. Let's think about how this improves market position. I think that I always want to connect, when it comes to sort of personal finances, you want to connect debt to sort of your values and goals, right? So if you write down all your values and you write down all your goals, you spend a lot of time on these exercises, prioritizing, okay, what are the top 10 financial goals I want to have? What are the top 5? What are my values? Write everything that's important to you, family, faith, adventure, travel, children, all these things, whittle that down to 20, whittle that down to 10 and 5. And then once you have these sort of 5 values and 5 goals, and you look at the debt, you're like, every time you make a debt decision, is this advancing or not advancing these goals? And so it's the same thing when it comes to the business owners, right? It's just the mission of the business, right? It's the business goals. And so always sort of framing it around that, I think, is very important. And rather than just going from, tactical situation to one to the next.
What about protecting what we own? I mean, you mentioned that as the 5th lever, or with asset protection. What's some general advice there?
Yeah, we spoke a little bit about it when it comes to sort of emergency funds, right? And these sort of lines of credit, and having the knowing, and as well, it's developing these relationships with banks that, or people that provide capital, so that way you can get that capital when you really need it. But it also has to do with coverage, right? What happens in, go through all the sort of horrible things that could happen to people, right? Death, disability, being disaffected, right? Like not being as interested in the business, or getting divorced, and what happens in those situations, and are there expenses, whether that's insurance or legal documents that can kind of protect you in those different situations, and just go through the checklist and see if you're, if those are risks that you're covered for, and if you're not, well, is that a risk you're willing to take? So
makes a lot of sense. What about an unexpected financial windfall like PPP, EIDL? I mean, let's be honest, a lot of business owners that are going to get these kind of loans are all of a sudden going to get more in one lump sum than what they're used to dealing with. So what are some of your strategies for people that are now tapping into these SBA loans that are there to help us with COVID-19 coronavirus? How do you not wastefully use that money and do it in a way where you can really strategically use it to not just help yourself get through this crisis, but to actually thrive on the other side of it?
Yeah, no, needs to be a lot of strategic planning on this, right? And I think that, so if you get these funds and you have 8 weeks to spend it, but then, well, if you laid off your employees, what are you going to do, right? Or do you kind of take a wait and see attitude and sort of, let's wait or so and kind of spend it in month 2 before the 8 weeks are up. But yeah, I think that, going through the process is very important, right? So I think that before you can answer what you do with a PPP loan, you need to sort of, do these scenario projections about your business and say, okay, if this goes on for 3 more months, 6 more months, 12 more months, what's going to happen with the business? Am I going to be okay cash flow wise? What am I going to do when it comes to my real estate? Am I going to ask for, a break from the landlord? If I'm a landlord, what am I going to do when people ask me to apply security deposits or want reductions? And so I think that we've sort of developed this checklist. Okay, let's go through the different items. What should you be doing about the CARES Act and real estate and employees and your emergency fund, and how do you think about these projections on your business under various scenarios? And then, okay, this money comes in, you might have 3 different answers, right? So in terms of how you spend that money, okay, well, maybe I actually don't want to spend it in 8 weeks and I want to use it and it'll convert to a loan after the 8 weeks because I have better uses for it 6 months from now or a year from now. And so I think that it kind of starts with a sort of a deep understanding of where your business is headed under those different scenarios, and then working back from that. Okay, how do we spend this money, and let's involve the team, right? It just, we're in the early days, right, in terms of in February and early March and April, and there's just so much misinformation, and so I think that kind of goes back to the team. You kind of want to check in with your team and see what the impact is tax wise, legally, as what will affect your market position on the various spending habits of these different lump sum programs, right?
Yeah. What about smart financial decisions? I mean, in every economic crisis, right, we see people that do really smart things. And then, years later, we're talking about the things they did, but we're in it right now. So what are the smart financial things to do right now? You see what I see. We're probably moving into a recession, right? Huge economic downturn. So what are some smart things to do with your money right now to make it work for you in a down economy to really take advantage of the conditions if you can?
Yeah, so it's interesting because we have some clients that, of course, that seen this, not necessarily this type of stress to the economy, but for example, when the market was down, at its lows of 37% for the year, they were like, okay, well, let's, I want to buy into this market, and so our initial reaction is, okay, well, let's wait, right? Like, we don't have an answer yet. as you think about your income and your business and your emergency fund and what your sense of expenses will be for the next 3, 6, 12 months. And until we answer those questions, we can't sort of, okay, well, let's play some offense and go back into the market. But, without a doubt, I think if, people need to be spending more time on all these different programs, talking to people like yourself about, capital and what are the opportunities in their market. I think that, a lot of strategic thinking has to be done around, okay, what are the systemic changes that are going to happen here, right? And it's not just, okay, yeah, well, people are going to be working from home more and traveling less, but what are the real changes to your business, and are there some investments you can make now, or you can be ready to make those investments when you're on solid footing. And so, I think it's really just being smart about expenses and kind of going through those different checklist items, and then once you've done all those different things, well, let's play some offense here, if you're able to.
Is it possible to create financial growth really in regardless of market conditions in any kind of economy? And if it is, like, what are some smart things that you see clients do where they do that, where whether it's good or whether it's bad, the financial decisions that they're making still help them still remain profitable, and still do well financially, no matter what the market conditions are?
Yeah. So I think that, when it comes to the clients who, they have a firm sense of, what their market position is and how they stand financially now, there definitely are some opportunities for them, right? And there's there were a lot of conversations, 4 months ago, 5 months ago, about hiring and sort of this, it was really hard to find skilled talent. And so now I think that, we're seeing many of our entrepreneurs and business owner clients take steps to expand or at least get ready to get that new talent, to get that talent that maybe wouldn't consider joining their company. And now, unfortunately, because of the situation, now they're more available, right? And so, yeah, there's these different things that, we won't know the results of these actions for potentially many years, right? So, but I think that everyone's aware that the financial implications of what people do now and the steps we do now and the measures we take and the investments we make now will reverberate for years and potentially decades, right? In terms of how it affects their businesses and profitability and their personal finances. Because we have examples, right? In 2009, there was a lot of opportunity in certain sectors and in certain types of for people that kind of stuck to it or pivoted. But yeah, but at the same time, we're having some difficult conversations, right? We have brought in a new relationship recently with a business owner client who, that conversation is about, okay, well, is it worth it to keep the business going, right? And there's vast sort of personal assets on the real estate side and investments, and it may not make sense to have this significant negative cash flow based on the rent he has to pay and the people he has to pay and all these other expenses. And so we have to really roll up our sleeves and do these scenario plans and see how it affects the businesses and his personal finances under those different scenarios. So everyone's in a different situation.
You've mentioned a couple of times emergency funds, and it's got me thinking, how much we keep in there? I mean, I'm sure it's not an amount. There's got to be some kind of calculation, but how do I know how much should be in my personal emergency fund and how much do I put in my business emergency fund? Because like for businesses, for example, I hear a month's payroll, 2 months payroll, enough to pay your bills for a year. I mean, what really makes sense, do you think, for personal and business to be able to have in those emergency funds?
Yeah, I think it varies dramatically, right, in terms of what the type of business that person is in and what their family situation is. I could give you a range, but you could drive a truck through this range, right? It's like 3 to 12 months, right? And for people that we worked with some self-employed people, right? And things change, right? So 12 months ago, we could be working with someone who has IT skills, and a lot of times those people sort of leave a job on Friday, and and they decide maybe a week later they want a job, and then they find a job in a couple of days, and things have changed, right? So I'd err on sort of the more conservative part of it, because I think that the emergency fund is sort of a direct correlation between that trade-off really between that opportunity cost of what essentially now is well under 1% in many cases to hold cash, versus potentially earning it a much higher amount in their business or in investment, a diversified investment portfolio. So yeah, I think that well, if you have no kids versus 3 kids, or it's a 2-income family versus a 1-income family, or you're in a business that is growing, an online business that's growing here, versus someone that is in the hospitality business, right? So it varies greatly on the situation.
What about being proactive? I see a lot of entrepreneurs just make bad decisions because they're constantly reacting, financially to what's going on instead of being proactive. What's your best advice for how to be proactive, especially with your business financially?
Yeah, so I think that a lot of times we don't sit down and write these multi-page business plans anymore, right? I think that at least having sort of the 1-page business plan, I think is very important for people to sort of always go back to and say, okay, well, what's our mission? Who are we focused on? And just revisit that again and again and again. And I think when it comes to sort of these little decisions that may distract you from your mission, or to kind of go back to that sort of 1-page business plan and say, okay, well, does this fit what we're trying to do? And well, if not, well, is the whole business plan something we need to really think about, and then spend some real substantive time doing that strategic thinking and getting your advisors on board to think it through. But you're right. I think that obviously some people have a lot of experience and their instincts are good, and so that sort of tendency to react can many times produces a lot of good decisions. But I think that it only takes one really to kind of set you back a lot. So I think sort of involving a thorough planning process is the best way to address that.
As we get ready to wrap up, David, we covered a lot of stuff, man. You're a very smart dude. You got a lot of really good advice that helps, I think, on the personal side and on the business side. What other advice do you have? Maybe things I didn't ask that I should have asked as we kind of wrap up about what entrepreneurs can do to just maximize their money, to keep the most of their money, to be financially responsible, both individually and for their business.
Yeah, I think it's, it's just another life skill, right? Financial literacy. And, I think that there's definitely a certain amount of this that you can outsource, but, the onus is on the business owner to really sort of, because I think that when you have advisors that are very competent and helping you move along towards, on the plot, your financial life, that path to freedom, right? And financial freedom, you're going to have more substantive conversations with those advisors. If you've taken a great interest in your personal financial literacy and are also, kind of getting up to speed on these kind of different areas, right? And so that's what I would encourage people to do.
Where can everybody go that's watching to hear more from you, to be able to get more information?
Sure. They can go to the Planning to Wealth blog, planningtowealth.com. On there's different strategies and tips for entrepreneurs, whether that's if you're growing your business or selling your business, or, thinking about what's sort of, buying a home or things like that as well. So we'd people want to reach out, there's my email's there, and or reach me through the contact form.
Awesome, man. I appreciate it. You covered so much great information. I hope you keep safe up there in New York City. And if you ever need a safe place to go down here on the beach, just look me up, man. You're more than welcome to come to hang here with me and the kids.
Sounds good, Ty. It's great chatting with you.
Yeah, same here. Thanks for coming on. So everybody, make sure you visit planningtowealth.com. That's planning, the word to wealth.com. A lot of cool stuff on planningtowealth.com. And the reality is we just covered a little bit of what David has to teach. There's so many other topics that he dives into. And he's a great resource to be able to connect with to learn more about you managing your finances the right way, whether it be on the personal and business side. What I've learned is that great financial management makes it way easier. You don't need to make as much money if you manage wisely the money that you do have. And you get a lot of these really cool tips and tactics on planningtowealth.com. So make sure you visit planningtowealth.com to learn more about keeping more of your money and being financially responsible for both as an individual and for your business to maximize profits. And like I said, keep more money in your pocket. That's planningtowealth.com. Thanks, everybody. Have a great day.